Hello, and welcome to CMS Forex News. I'm CMS currency analyst Nick Nassad. Today is Wednesday, September 17th. There were further signs of recession gripping the UK economy as August saw the biggest jump in jobless figures since December of 1992. The claimant count showed 32,500 people claiming unemployment benefits in August. The ILO unemployment rate rose to 5.5% from 5.4% in the 3 months to July. The Bank of England voted 8-1 to hold rates steady in September, with David Blanchflower the only member arguing that a rate cut was necessary in order to pull the economy out of recession. His logic is that the deteriorating economy will act to restrain demand and push inflation below 2%. Inflation had jumped to 4.7% in August, and the other members, seeing a rise in prices, did not want to show the market any weakness or take a knock on their credibility in the face of higher inflation. The Euro-Pound pair had a volatile session and has recently completed a 320 pip slide from its record high near 0.82. This brings the pair back into its range seen throughout most of the summer. In the US, building permits fell to an annualized pace of 850,000 in August, which was far below expectations and is now 36.4% lower compared to August of 2007. The annual pace of housing starts also declined, measuring 895,000, which also undershot expectations. It was 6.2% lower than last month's figure and 33% lower compared to last year. Strong housing data was needed today to convince the market that the effects of the subprime meltdown have peaked in intensity. Instead, it seems further correction may be ahead. Late yesterday, the government announced that they would bail out insurance giant AIG with an $85 billion loan in order to prevent a potentially catastrophic bankruptcy which would have ramifications around the world. The government now controls an 80% stake in the company. The dollar-yen pair rebounded from yesterday's low near 103.50 to test 106.70, a 290 pip move. But as news filtered in about the AIG deal, risk aversion helped boost the yen once again. U.S. stocks tumbled today, with the Dow Jones finishing 450 points lower, and both the Nasdaq and S&P were off 5% for the day. Hardest hit were financial shares, Morgan Stanley and Goldman Sachs. The dollar-yen fell to 104.50 as risk aversion dominated today's session. The euro-dollar, after testing 1.41 in the early afternoon, jumped 250 pips to test 1.4380 as oil rallied and was up about $6 by 3:30 p.m. Eastern. The pound-dollar pair had a similar reaction in late afternoon trading, surging 400 pips higher than its low at the New York Open. It broke above Monday's high near 1.81, finding resistance at the 1.8240 level. Tonight, Japan will release a measure of services and its Bank of Japan monetary policy report. Overnight, the UK will reveal its retail sales, and the Swiss National Bank decides on interest rates. Tomorrow morning, the US will release its weekly jobless claims, Philadelphia Fed Index, and its measure of leading indicators. Canada, meanwhile, posts its wholesale sales and its leading index. And that wraps up today's edition of our broadcast. Thank you for joining us here at CMSFX.com.